Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, March 24th, 2010. Well, folks, the markets are lower for a rare day today, as the Dow is down about 45 points, Nasdaq is down 14, and the S&P 500 down about 6. That's basically a 0.5% across the board. Now, what's the catalyst for the down day? Well, obviously, we do see a stronger dollar. Stronger dollar is always a play on the markets, and again, as you can see here, and I'll pump up the dollar chart for us all to take a look at here, we are seeing the markets again down on that stronger dollar. Now, UUP again, here's your chart of the UUP. You can see gapped up today again. Portugal was downgraded. Their debt rating was downgraded. That country, again, that's coming on the back of all the Greece issues that have been out there over the last, multi-month period. That was a key catalyst because that drives up the dollar. Again, it basically pushes the euro down. If more problems in Europe means the euro currency goes lower, therefore the dollar in response has to go higher. And again, that's what we saw. Now we're seeing a dollar coming in a little bit, which should be helping the market slightly to the upside. If the dollar does come in, again, markets should be helped to the upside. Let's take a look at the SPY, and you are seeing that. Look at that little surge on the markets there. That correlates beautifully with the drop in the dollar just on an intraday basis as the dollar is dropping here. Now, a couple other things. What besides Greece really was the catalyst for today's small down move in the markets? And again, Dow is down right now about 40 points or so. Nasdaq is hovering down about 12. S&P down about 5.5. But what the key was, the other economic news that was of interest to me today was the new home sales. New home sales hit new low. All right, durable goods overall were positive but kind of right in line. But the new home sales have been very, very weak here, folks, and has to be kind of watched of late to see where this goes. Because if no one's buying homes still, folks, those homes are going to drop in value. That's going to put more people in foreclosure risk. We're going to see more problems in that housing market area. So again, keep an eye on those home sales. Again, new home sales today not good on the top line numbers. Now, going across the board, let's talk some technical sense in this market. What on earth are we looking at towards the end of the day? Well, first of all, you have to recognize volume, guys. Volume is insanely light again. This is a very rare down day on a light volume day. Usually, if the markets are lower, it's because we have a surge in volume and you see institutional selling. That's not the case today. The markets are slightly lower, down about 55 cents on the SPY, but again, only 136 million traded on the SPY. That's a rarity, folks. Absolutely rare. Now, a couple other things to go over here. Number one, when we're talking about resistance levels, what you're seeing here, this blue line, 50 moving average, is resistance, as is this 20 moving average. If the market could puncture through that, you have a high priority chance of going up all the way to this pivot high here on the spiders. And again, that level coincides with this area right around 117.15. And again, that's if we get through the 50 moving average. So 117.15 would be your next spot of interest. And if you get through that, the high of the day today, 117.30. Make that, right around that 117, 33, 34 level on the day. All right, if you get through that gap fill again, right around 117.50. Now, the key is on the downside, guys. Take a look at the downside of this market. What are the odds of us breaking down later today? Needless to say, you would like to see an increase in volume if that's going to have a shot. If there's no increase in volume, it's going to make it very tough to break down. But what you do see is the 200 moving average here in red. Right around from this point, all right, you have a little bit of a fake print right here that did play out today. From this point here, that coincides with the 200 moving average, and then right here, so you have a double bottom. If you count the fake print from yesterday, a little bit of a triple bottom. Today, we got a new fake print down to here, which could signal that the market is going to move down in that range as well. But right now, this 200 moving average, double bottom, is holding up exceptionally well. Now, why is that? Well, because you just don't have enough volume to break through it. The 200 is always a major support line, and without volume, you have to look at it and say to yourself, all right, there's a high priority chance or high probable chance that this market, unless the volume increases this afternoon, holds that level. Now, again, there's another trend line I want you guys to watch this afternoon for a slant to the upside for a breakout. Take the high pivot from yesterday and just draw it right through here, all right? Take a look right there. That'll be one for sure to keep an eye on. So connecting the high here to the secondary middle high, if you come up above that, you might have a little bit of resistance as that slanted move does come into play. In addition, you can just see the downside right here, right? Pretty much coinciding with the 200 moving average. A little bit of a triangular pattern now developing. You want to watch which way this is going to break. Spiders, again, are getting a little bit of a pop here, and that's just on the back of the fall in the UUP, which is the dollar index. Any little downtick in the dollar is always an excuse to rally the market. As you can see right here, a little bit of a fall, right? A little bit of a fall right there, although it's coming off the lows as well. Now, a couple things to note. Yesterday, we had some leading stocks that were weak. What were those stocks? Well, Goldman Sachs was weak yesterday. Also, we saw research in motion, Amazon and Goldman Sachs all weak yesterday, I believe. Now, overall, those stocks are kind of mixed today. You still have Amazon dropping even more. AMZN was down quite a bit yesterday. It is down even more today, although getting a little bit of a surge here in this current candle as the market pops slightly. What you can also look at Amazon is take a look at this trend line. This will be resistance on Amazon in the intraday. If you come up in this range, which is right around the 50 moving average, it should be a good shorting opportunity on Amazon for a scalp play in the afternoon session. In addition, you can always take this little pivot low right here and again create some sort of little triangular pattern to keep an eye on. Now, a couple other things to go over. We talked about Amazon was weak yesterday, again weak today. That's one stock not confirming this little bit of strength over the last couple days, even though we are down today. What is another stock? Well, Goldman Sachs. Goldman Sachs was down pretty dramatically yesterday, although it did rally back late. And today it moved up. It gapped lower, moved up dramatically, and then has failed again and started to come in. You have that same sort of pattern here where you have resistance on the upside, lower highs being put in. The question is, again, in this light volume environment, do they have a buy program to send this market up, up, and away? That's been the common theme, folks. Again, we saw it yesterday unbelievably. If we go back to the spiders, take a look. Look at this yesterday. All of a sudden, light volume over here. Again, light volume all day long. Under 200 million. The markets tend to have a good bounce if that does happen and a good probability of moving higher. Today, yesterday, last hour of trading buy programs galore, sending the market up. Today, we haven't seen that. You've seen glimpses of it from here, this drop, and then we moved all the way up. Today, again, you're starting to do it. The question is, do we have enough in the tank today and the light enough volume to create that atmosphere for that type of squeeze late in the day? It's a very good probability or possibility, folks, only because the volume is so insanely light. Now, by chance, if you can get through this 200 moving average, look for a good solid sell, possibly all the way down to 116.40. 116.40 is the pivot from yesterday. That's the low from yesterday. If you do get taken to that level, that would be major support. But that will only happen, and I repeat, it will only happen if the markets are able to break the 200 moving average on the downside. And again, you need to see a little bit of a surge in volume to take that out to the downside. Probably a little strength in the dollar would help as well in that regard. Couple other stocks to go over. What has been one of the stronger stocks over the last couple days? We talked about the weakest. Now, what about the strongest? This stock right here, JP Morgan Chase. Unbelievable move yesterday, really on the back of multiple moves. Today, again, is positive, up 20 cents. Not a big move today. Yesterday was a solid move. If you take a look at the daily chart on JPM, look at this move to the upside. I have your resistance level right here. I'll give it to you guys right now. This is your area of resistance on JP Morgan, all right? You're now in the lower level of resistance on JPM. That scans all the way from 44.75 to 44.80, all the way up to 45.15, 45.20. So there's about a 40-cent range of major resistance on JPM coming into play now. Very extended chart, needs to pull back, but again, it will require the markets to reverse here dramatically on volume. Volume is number one at this point. You have to watch that. That will be the key play. Now, a couple other things for tomorrow, folks. We got the new home sales today. We got the oil inventories. We got the durable goods today. They were overall medium numbers. Durable goods were kind of in par, and the new home sales were not great. The market, again, seeing a little of that weakness, also because of the Portugal downgrade in debt rating. But bottom line, tomorrow, jobless claims, guys. Jobless claims must be watched tomorrow. That's going to be the big thing for tomorrow's chart watchers and market watchers to keep an eye on. So let's focus in on the intraday here. Spiders stalling out here at the 20 moving average a little bit. You also have this resistance level right up here. A lot of resistances on the upside, but the volume, again, must keep you a little on the cautious side for this market. All right, guys? So that's what I'm currently seeing in this market. Stay tuned. Join the Research Center, folks. Again, just put out a couple new trade alerts in the Research Center today. I want you guys to jump in and get those. Make sure you guys are on board so you can take advantage of these plays. The short ETFs on this market are having a solid day. Stocks like EDZ up $1.50 on the day, and even the VXX, which moves with volatility, is having a solid day as well. We'll talk about those more in tonight's intraday, or nightly, I should say, nightly video in the Research Center. Take care, folks.